Okay, dear students, this is Mustafa Mirchawala, your trainer, F6 TX trainer. And today we are going to discuss the revision day, the latest past paper of F6 TX, March-June 2022 attempt, right? Okay, this is the latest past paper available on the net, right? Okay, I've already recorded the previous past papers. Now, the objective of this class is not to solve the past paper. The objective is to give you confidence, because as these are the last days, and you know the paper F6 or TX is consisted of small many things, lot of things to learn, lot of things to memorize. So normally students confidence got shaken in the end. They say a lot of things. So the objective is to give you guys confidence. So plus we'll be solving the latest past paper. Now, latest past paper means latest fashion, the latest trend, the latest questions what examiner is asking in the exam. Okay, so if you can solve these questions, you can also solve your upcoming exam paper, right? Okay, now just for your motivation, I'm going to share my recent scores. These are the recent scores, last month's scores. Okay, and including in this, these are two position holders, like this guy. The guy who scored 95, he scored Pakistan top. Okay, and this guy Khwaja Hasibuddin, he scored Saudi top. Okay, this guy, the 95 marks guy, could have scored the world top as well, but I think with 2 or 3 marks. Okay, now, but still I say we share these scores for your motivation. When they can do it, why can't you? They are also normal students. They studied in the same way. They attended the same revision days, everything they followed. Why can't you? Okay, but one more thing I say, that for me, all these marks are equal. For me, 50 is equal to 100 and 49 is equal to 0. The first target is you have to clear the paper. You have to pass. You have to cross the 50 marks border. Okay, that's the most important thing. Take it as your first objective. If you are doing this, you are the best. Don't look at the scores. Even when you go to the job market and when you go to practically to the industry, they just need your skills, they need your confidence, they need your commitment. Nobody sees your score. That's the reality. Okay, now don't waste the time. One advice I would like to give you: do read the exam report. Always read latest 2 or 3 exam report. That's very useful. At least keep 2 or 3 hours for that exam report reading. Okay, that's the latest thing. Okay, right? Now I'm going to share the latest past paper, and as we all know that examiner only discloses the last 40 marks of the exam. Only discloses the last 40 marks of the exam. And one thing I told in my last webinars as well, last attempt, we attended a global seminar, and in that they said globally, they said the reason of failure of applied skills module for all globally students is last 40 marks. Normally students got failed because of last 40 marks, not because of first 60 marks. Okay, so pay special attention to last 40 marks, solve it properly, do proper practice on your computer, right? Exam software. Now, this first of all, we are going to discuss the 10 marks question, but you know, those who attempted the last attempt, those who gave the paper in last attempt, they were the luckiest guy. I mean, that's why you can see the scores touch 95. 95 is a big score. Now, so one of the easiest paper of all time, last attempt, and it's a luck. Now, one thing I would like to tell you, that please join the WhatsApp group. We have sent a link in the chat box. We have sent the link in a chat box so that you guys can join and you guys can discuss your issues. Plus, I will also send some stuff relevant for you guys. So it's better you join that WhatsApp group. Okay, the link is in the chat box. Thank you. Let's start. You should assume that today's date is 25th of March 2021. You are a trainee chartered accountant dealing with the tax affairs of Flair. Fleur has been self-employed. Self-employed means individual businessman, individual. Since 6th April 2007, and has previously asked you to calculate whether it would be beneficial to incorporate limited company, her business on 6th April 2021, the first day of your fiscal year. The first day of your fiscal year. My voice is perfect, I think. Somebody's asking that my voice is low. It's perfect. I think it's the problem at your end. Please tell me in the chat box, is the voice is perfect? The voice is fine. Okay. Now, so now we are deciding that from 6th April 2021, please now concentrate properly on this screen. We are deciding that from 6th April 2021, we register our business from individual to limited company. Previously, we were working as a sole trader. Individual, human. Now we are planning to incorporate our business into a limited company. So is it a good idea or bad idea? That's we have to see. Now, the good news is that examiner has already solved one part of the question. Examiner has already solved one part of the question. One part of the question has already been solved by the examiner for your reference, okay? And you have to do some additional working. Now, listen. Her forecast tax adjusted trading profit was 100,000 for the year ended 5th April 2022. Now, what is the good news? The good news is that, see, the year ending is on 5th April, exactly 5th April. Year end is on 5th April. That means it's starting on 6th April. So your accounting period is 6th April 21 to 5th of April 22. Okay. So the good news is the accounting period and fiscal year is already same. Accounting for individual purpose. In companies, fiscal year is not relevant. For individual purpose, your accounting period and fiscal year is same. So there no need to do basis period calculation. No need to do any basis period calculation. Okay. Now be active. Flower Limited forecast tax adjusted profit for the year ending 5th April 2022 was 100,000. After taking account of Fleur's director's remuneration of 35,000 and the related employers class 1 national insurance NIC class 1 NIC of 3610. This was to be 61. See, these are the workings. This was to be 61390. Right now, wait. Let me explain you. Let us say we incorporated a company. We just formed a company. Go very slow. We just formed a company. Okay. And now this guy, the name of this guy is Fleur, right? Fleur become the director. Of this company. For your information, the director is basically the employee of the company. So company is employer and this Fleur director is employee. So now the basic rules, trading income rules, whatever employer is spending on employee is an allowed expense. Whatever employer is spending on employee is an allowed expense. Okay. So employer is first of all giving the salary of 35,000. Employer is first of all giving the salary of 35,000. That is also allowed from corporation tax working. Yes. Secondly, when company is employer, so this director Fleur is the employee. So now company has to pay class 1 employer NIC. Company has to pay class 1 employer NIC for this guy, for this director, and that is also allowed expense. So just use your brain. The trading profit was 100,000. I'm just solving it rough working. I'll solve it on the Excel as well. Don't worry about it. Just relax. The trading profit was 100,000. Now less the director's salary was allowed expense. It was 35. And the good news is that they have ready-made given you the class 1 employer NIC. They have given you the class 1 employer NIC, which is my dear students 3610. Okay. So if you deduct all these, you will get 61390. 61390. This is your TTP, corporation tax TTP, total taxable profits. And you just multiply 19% with this. You just multiply 19% with this to calculate corporation tax. You just multiply 19% with this to compute corporation tax. Okay. Okay, students. Now, let me come back to the question again. So Fleur would then have withdrawn 45,000 of the company's profit as dividends. Yes, okay. Because Fleur has two status. Fleur was the director. Director means employee. Fleur was the director. Director means employee. So as an employee, he took the salary. As an employee, he withdrew the salary. And now this Fleur is also the 100% owner. Fleur is also the 100% owner of that company. So Fleur would be extracting dividends as well. Now, whatever dividend Fleur is extracting from the company, dividend is never an allowed expense. Dividend is never an allowed expense for company. I hope you know this. But yes, for Fleur as an individual, for Fleur, look at here. For Fleur as an individual, dividend is a taxable income. Yes, for dividend, you have to pay, as an individual, you have to pay tax on dividend. You have to pay tax on dividend, and you know the rules. NRB 2000 is the NRB of dividend. Then you have 7.5% and so on, right? 32.5%. The rates, 37,700 is the band. Everything, the story, you know. One thing must be clear, that by now you are on the end of the course. You are in the revision days. You must know the basics of the course, please. You must know the basic of the course. That's what I expect from you guys. Okay. So Fleur would then have withdrawn 45,000 of the company's profit as dividends. Fleur has no other source of income. Okay. Now, so you have two scenarios. The first scenario is, just think this guy Fleur as a sole trader. This guy Fleur as a sole trader. If this guy was a sole trader, then complete 100,000. Then complete 100,000 is the trading profit. Complete 100,000 is his trading profit. Okay. Now, can anybody tell me, as a sole trader, what he has to pay? He's an individual human being sole trader previously. So as an individual, he has to pay income tax on non-saving income, non-saving income. As a sole trader, trading profits are non-saving. Then as he is individual and he is earning trading profit, so he has to pay class 2 and class 4 NIC. I hope you remember class 2 and class 4 NIC. He has to pay. Okay. So now my dear student, they have done these things for you. They have already done, the examiner has done this thing for you. See this package. Operate as a sole trader. See, operate as a, let me enlarge the screen. Operate as a sole trader. See this. As a sole trader, this is the income tax. Okay. This is the class 2 NIC and this is the class 4 NIC. So what is the total number? The total amount of taxes are 32249. Already they have sold. That's the good news. The total amount is 32249. Okay. Now, what is the second scenario? In the second scenario, when this guy incorporated the company, look at here. Now, in that case, when this guy is withdrawing salary as well as dividend, salary means employment income and dividend itself is dividend income. So as an individual, Fleur has to pay income tax first. So this is the income tax. Dear student, this is the income tax on the second scenario. This is the income tax. Now, obviously, now he has incorporated the company. So, and he's the director of that company. Director means employee. So company has to pay class 1 employer NIC. This is one more cost. Okay. Number 2, then as he's the employee, When company is the employer, then he is the employee. In UK, each and every employee has to pay class 1 employee NICC. So class 1 employee NIC and class 1 employer NIC both are relevant cash flows now. Then finally, he has to pay corporation tax, which I just showed you, 61390 times 19%. 61390 times 19%. So this is going to be the second package. This is going to be the second package. Okay. So you have both options in front of you. My dear students, my respected students, you have both options in front of you. Can anybody tell me which option is better right now? Which option is better now? Which option is better right now? This option is good. This option is honestly very good. So somebody recommended him through this calculation. These calculations are correct. These calculations are correct. Somebody recommended him. Somebody recommended him that yes, go as a sole trader. It's better you go as a sole trader because the numbers are low. Because the overall tax he has to pay as a sole trader is lower than as compared to the company side. As compared to the company side, this is the existing story. And yes, my dear student, in the existing story, the overall trading profit was 100,000. Don't forget, the overall trading profit was 100,000, right? Okay. The overall trading profit was 100,000. This is the starting story of the question. These are the already ready-made solved numbers. Already ready-made solved numbers. Now you all have to be very smart now. Now going forward, you all have to be very, very smart, very smart worker. No need to do extra things. Keep in mind your existing trading profit was 100,000, right? Just write on the chat box, did you understand this story till now? Did you understand this story till now? Did you understand this story till now? Please write on the chat box, my dear students. Okay, now please be with me. Be with me. Thank you. Be with me. Now, what's the next step? This is the real question now. See this. Fleur has just signed a contract with new customer and has revised the forecast for the year ended 5th April 2022. Now the new profit is not 100,000, it's going to be changed. She now forecasts that her tax adjusted trading profit for the year ending 5th April 2022 will be 135,000 rather than 100,000. So use your brain. There is an increase. There is an increase in trading profit. There is an increase in trading profit by 35,000. There is an increase in trading profit by 35,000. Okay. So you have to work on both options as a sole trader as well as a company. As a sole trader as well as a company. Okay. Don't sleep. Now what are the changes as a limited company? The forecast tax adjusted trading profit for the year ending 5th April 2022 will be 135,000. Okay, we know this, rather than 100,000. Directors' remuneration will remain 35,000. That's a very good news. Good news. See, the examiner didn't change the director remuneration, and this, because of this, say thanks to examiner, that now we don't need to calculate the class 1 employee NIC and class 1 employer NIC again. Just copy paste the previous one, because we all know class 1 employee NIC and class 1 employer NIC are calculated on cash salary, cash bonus, and mileage allowance received over 45 pence. Although in this question there is no bonus and the driving allowance, leave it. So the cash salary in the previous data and this data remains same, 35,000. So thank God, we don't need to calculate any class 1 employee NIC and class 1 employer NIC again. Just we need to copy paste the numbers. We just need to copy paste the previous numbers. That's the good news. Okay, right? And one more good news. Your allowed expenses will remain same. See, for corporation tax purpose, again you have the same salary. And again you have the same class 1 employer NIC. So your allowed expenses will remain same. Just this will be changed to 135. This trading profit will change to 135. Your trading profit will change to 135. So what changes you need to make? Look at here. Look at here. Your this final answer will be increased by 35,000. Your this final answer will be increased by 35,000 and then multiply 19%. Then multiply 19%. You can do it like this: 61390 plus 35,000 times 19%. Why? Because in the middle everything is same. Your allowed expenses will remain same. The same 35,000 director salary, the same class 1 employer, and I see no change in it. No change in it. So just increase your bottom number by 35,000. Okay. And one more thing you can do. Don't sleep. One more thing you guys can do. The existing corporation tax you have the existing corporation tax plus just write plus 35,000 times 19%, you will get a new corporation tax. Plus 35,000 times 19%, you will get the new corporation tax. That's it. That's it. Listen my lecture very carefully, because I will be shifting to the Excel part and then I won't explain. I'm explaining you right now. So understand each and everything very carefully, please. Now, but Fleur will increase the dividends. But Fleur will increase the dividends taken from Fleur to 70,000. Yes, now the dividend amount is changed. But again, the good news is, for corporation tax purpose, dividend income is not an allowed expense. Dividend is not an allowed expense. For corporation tax purpose, dividend is not an allowed expense. So no change in corporation tax. No change in corporation tax. Yes, but for individual taxes. Previously this guy was receiving 45,000 dividend income. Now this guy is receiving 70,000 dividend income. So yes, individual income tax will be changed. Individual income tax will be changed. Okay, right? I will do it. You don't worry about it. Now, Fleur wants to know whether the additional 35,000 of profit will now mean it is beneficial to incorporate her business on 6th April 2021. So Fleur is asking your advice that after these changes, is it beneficial to operate as a limited company or not? So you have to calculate all these things again, although you will use the existing data. Okay, but you have to take decision on the basis of the above table. You will calculate both options total. My dear students, and then you will comment on the basis of the final answer. That's it. Okay, again I'm asking, did you understand the story till now? Did you understand, my beautiful students, my dear respected student? Did you understand the story till now? Please comment. Thank you. Be confident. Okay, let me explain you as a sole trader first. Listen, as a sole trader, see this. As a sole trader, my dear students, you have to compute three things. As a sole trader, you have to calculate three things. As a sole trader, he has a trading profit of 135,000 now. As a sole trader, he has a trading profit of 135,000 now. Yes, on trading profit, I will be calculated income tax, and trading income is a non-saving income. Trading income is a non-saving income. So I'll be calculating income tax on trading profit. Okay, I will do it. Don't worry about it. 135,000, easy working. Then class, this will be changed. Okay, this thing will be changed. I will do the new working for you. Now, class 2 NIC, you all know 3.1 pounds per week. It's fixed, same. So this will be same. Class 2 NIC, you know, it's a fixed number, so it will be remain same. No need to worry about it. But yes, class 4 NIC, my dear student, yes, for class 4 NIC, there are rates based on percentage. Now wait. This class 4 NIC is computed This class 4 NIC is computed on the basis of trading profit of 100,000. This class 4 NIC is calculated, my dear students, please look at here, is calculated on the basis of trading profit of 100,000. But you know, now the new trading profit is 135,000. Previous trading profit was 100,000. The new trading profit is 135,000. Now play smart, play smart. Look at, let me show you the rates. Let me show you the rates if you are present. See, these are the class 4 NIC rates. Existing trading profit was 100,000. Existing trading profit was how much? 100,000. So that means already this guy consumed the first band, second band, and this guy is in the third band. This girl, this lady is in the third band. 100,000 means the first two bands has already been consumed. 100,000 means the first two bands has already been consumed, and she is in the third band. So now what she should do, wait, what was the existing number? 4568. Existing number was 4568. Okay, plus existing profit was 100,000. The new revised profit is 135,000. So we can see the additional trading profit is 35,000. Additional trading profit is 35,000. So what we will do, the additional trading profit will come in this band. The additional trading profit will come in this band, that is 2%. So if you add 35,000 times 2%, what will be the new class 4 NIC? New class 4 NIC. New class 4 NIC. New class 4 NIC is 5268. New class 4 NIC is 5268. See, we have done this as well. So it's not a big thing. As a sole trader, my dear student, yes, I'll compute the new income tax. Leave it on me, I'll do it. Or even you can do it as well. Second thing, you guys have class 2 NIC will remain same. Class 2 NIC will remain same. And yes, this is the class 4 NIC I've just done for you. So as a sole trader, we have done all the three things. We have done all the three things. No need to copy. No need to copy anything. I'll solve it formally on the Excel thing. Now, next thing, as a company, students, now the second option is operated as a company. Look at the screen. As a company, now income tax, yes, it should be changed, because previously this girl was receiving 35,000 salary and 45,000 dividend. Previously this girl was receiving 35,000 salary from the company and 45,000 dividend. But now, I'm sure you know the question, you just read it. Now she's receiving same 35,000 salary, but 70,000 dividends. But 70,000 dividends. So yes, income tax individual working will be changed, but class 1 employee class 1 NIC will remain same because there is no change in salary. Class 1 employer remains same. And yes, corporation tax will be changed. I just told you how it will be changed. This existing number 11664 plus 35,000 times 19%, plus 35,000 times 19%. This is how we'll do it. This is how we will do it. We'll be doing it. Okay. This is how we'll do it. Okay. Right. Just a second. Wait a minute. Okay, sorry. Now, so only corporation tax and income tax will be changed in the second working. Okay, I'll do it for you. Now you look at here, the corporation tax, the new corporation tax working, I just explained you. The new corporation tax working, I just explained you. The new corporation tax working, I just explained you. Okay, so I hope you understood it. Now we just have to implement on the answer sheet. Not a big deal, but if you have listened this lecture clearly, you will be able to do it. You will be, even in the class, many of students have done, must have done by now, just basic working. Okay, so let's move on the okay. Okay, so students, you can see on your screen, you can see the solution of this question number 1. Now first thing, as I'm not here to teach you how to type, please, this is not my objective, be very clear. That's why I have written some data ready-made. Some data I have already written ready-made just to save my and yours time. Okay, okay, but in the exam you have to write each and everything. These headings I have already written before the class just to save my time and your time, but in the exam you have to write. Okay, so now this is the first option, which is remain self-employed. Remain self-employed means remain individual sole trader. Remain individual sole trader. Now in the remain individual sole trader, first of all, one thing I would like to tell you, do you guys have the question? I think we have sent you on the WhatsApp. I think we have sent you on the WhatsApp group. On the WhatsApp group, we have sent you the question. Wait. I have sent you the, wait. Wait, let me send you the question. Just sent. The question paper is on your WhatsApp group now. Okay, if you want to see, you may. Now, first thing, if we work as a self-employed, if we work, my dear student, as a self-employed, so yes, now our previously our trading profit was 100,000, now it's 135,000. So your trading profit will be now 135,000. Now listen, as we have no other income, this will be our total profits. This trading profit will be your total profit. And as we have no qualifying interest, so this will be your net income. And in this question, there is no gross gifted donations, no personal pension contributions. So this is your ANI. This is your ANI. And now hope you remember the rules. Whenever your ANI is greater than 125,140, 125,140, then in that case, your personal allowance is 0. So your personal allowance in this question is 0. Your personal allowance is 0, right? So in that case, the same 135,000 will come here. Your taxable income will be 135,000. Your taxable income, my dear student, will be 135,000. Okay. Now let's calculate the tax on this taxable income. We all know it's non-saving. Yes, trading income is pure non-saving income. Basic things. So for non-saving, the first band is 37,700. So what you will do, wait, 37,700 times 0.2, and then can anybody do 135,000 less 37,700? 135,000 less 37,700. Wait, 135,000 less 37,700, it makes 97,300. 97300 times 0.4. This is just for your reference. Now let me calculate. Let me calculate here. Equal 37,700 times 0.2. Now and equal 97,300 times 0.4. Okay, let's add it. This is 46460. 46460 is your 46460 is your income tax liability. 46460 is your income tax liability in that case, in the first case. Okay, using the trading profit of 135,000. This is not a big deal. Basic income tax, you have done advanced level income tax. This is basic income tax. Respected students, this is basic income tax. And don't worry about copying anything. We'll provide you this Excel file as well. We'll provide you. Just relax. Now, let me copy it for your, we have to post in the above table. See. Okay. Wait. Okay. Now, what will be the class 2 NIC? I just told you class 2 NIC is always a fixed number. Class 2 NIC doesn't change with the trading profit. So class 2 NIC was previously written in the question 159, remains same. Okay. And now what about class 4 NIC? I just explained you using my iPad. The class 4 NIC will be changed little bit. Yes, the existing class 4 NIC, plus 35,000 times 2%. Existing class 4 NIC was 4658 plus 35,000 times 0.02. This will be the working. This will be the working for 4568 plus 35,000 times 2%. Okay, let me do it here. See this, it's 5358. Okay, so we have already done it. For in the workings. So now let's add this packet. It will be 51977. It will be 51977. So in this question, with the revised trading profit of 135,000, if you work as an individual, students, look at here. If you work as an individual, as a sole trader, your revised total taxes will be 51977. 51977. Okay, 51977 will be your total taxes. Did you understand till now? Quick message, quick chat box, please. Are you with me? Quick chat box. Okay, good. Fine. Thank you. Don't sleep. This is the first request. Don't sleep. Now let's move with the second option. Let's move, my dear students, with the second option, which is the incorporation like limited company. Okay. With the limited company, first of all, just think. Now this guy, as an individual, this guy will receive a salary. This girl will receive a salary of 35,000 and then a dividend of 70,000. For as an individual, salary and dividend both are taxable income. So let's calculate the revised income tax. Let's calculate the revised income tax, please. So Remember, I teach this like this way in the class: non-saving and dividend, right? Sometime I make the column of interest as well, but in this question there is only employment income, which is non-saving income, and the dividend itself is dividend. Okay, so how much is the director remuneration? It's 35,000. How much is the dividend income? It's, my dear students, 70,000. Okay, so if you add these two, wait, so you will see 35 plus 70, 35 plus 70, 35 plus 70 is equal to 105,000. 35 plus 70 is equal to 105,000. Don't sleep. Now, you don't have any other income. You don't have any qualifying interest. So this will be your net income and this will be your ANI. ANI. Hope you remember. Now your ANI is 105,000. Now your ANI is 105,000, which is greater than 100,000. So whenever your ANI is greater than 100,000 and less than 125,140, you have to do a reduction working. You have to do a reduction working. I'm sure you remember. Let's do it. Let's do it. Wait. See, your ANI is 105,000 less income limit. Income limit is 100,000. How much is the excess? How much is the excess? Excess is 5,000. Excess is 5,000, and you know you have to divide it by 2. You have to divide this excess by 2. Excess by 2. Okay. Now wait, Azan is going on. Just 20 seconds. Wait. Just 10 seconds, 20 seconds. Okay, students, see. So what we do, we write the normal personal allowance, which is 12570, and how much is the excess? Excess is 5,000. Excess is 5,000. We do divide by 2. Excess divide by 2 and we reduce it. See this. So 5,000 divided by 2 is 2,500. 5,000 divided by 2 is 5,000 divided by 2 is 2,500. So your updated personal allowance, your reduced personal allowance is 10070. Your reduced personal allowance is 10070, which you can use in your main format. This is again a routine thing. Please, in the class, you are being taught all these things. So let's move to the main format. So how much? Look at here. It's 10070. And yes, the priority for deducting personal allowance, the priority for deducting personal allowance is always first non-saving income. Always first non-saving income. Students, look at here. So you have now, this is your final taxable income. This is your final taxable income. This is your final taxable income. Okay. Now you can calculate the tax yourself. I'm telling you, now you can calculate the tax yourself. First of all, you know, you have the 37,700. 37,700 is your first band. For 37,700 is your first band. Now just pick up your non-saving income. Non-saving income is how much? 24,930. Your non-saving income is how much? 24,930. It can easily come in the first band. It can easily come in the first band, and the tax rate for non-saving income is 20%. So what you will do, you will write here 24,930 times 0.2. Times 0.2. So this is the tax. This is the tax for non-saving. This is the tax for non-saving. Okay. Now, how much capacity is left? See this. Your band was 37,700. Your band was 37,700 less 24,930. How much is the capacity left? Now you have 12,770 capacity left. You have 12,770 capacity left. And now come to the dividend income. Now come to the dividend income. We all know for dividend income, the famous dialogue, always first 2,000 times 0%. NRB, dividend income NRB is irrespective of your income, right? So first 2,000 times 0%, 2,000 times 0. So it will be definitely 0. Okay. Now, as we all know, yes, the rate of NRB is 0%. The rate of NRB is 0%, but yes, NRB consumes your band. NRB consumes your band. So what the remaining capacity of your first band was 12,770. Now let's deduct this thing as well. How much is left? Now you see 10,770. 10,770 is left. 10,770 is left. Now look at here. See this. Minus 2,000. Okay. And minus 10,770. Can you tell me how much dividend income will be left for second band? How much dividend income will be left for second band? It's 5,7,230. It's 5,7,230. So let's write the rates. This 10,770 dividend will come in the first band, and the first band tax rate, for dividend is, I think, 7.5%. It's, I think, 7.5%, 7.5%. So it will be 0.075. Okay. Now, what about the remaining 5,7,230? The remaining 5,7,230 obviously will come in the second higher rate band. The remaining 5,7,230 will come in the higher rate band, and the rate is 32.5.325, 32.5%. Okay. So let's do it. Let's do it. Equal 5,7,230 times 0.325. Okay. Now let's add up. Let's add it up. It's 24,393.5. It's 24,393.5 or 24,394 you can write, or 24,394 you can write. Okay. Did you understand this thing? Did you understand this thing? Please tell me. Did you? Okay, thank you, thank you. Let's move to the main screen, 24393.5. So your income tax is 24393 or 24394, you can write. Okay. Now, as I told you, in this second case, your class 1 employee NIC will remain same. Your class, because no change in the salary, so the class 1 employee NIC and class 1 employer NIC will remain same. What was the number of class 1 employee and class 1 employer NIC? It was 3052. 3052 remain same, and the second number was 3610. 3610. I just copied these things from the question. Okay. And now what about the corporation tax? What about the corporation tax? Already explained you through the pen. Already explained you through the pen. Existing corporation tax plus 35,000 times 19%. Existing corporation tax was 11664, 11664 plus 35,000 times 0.19. This is the thing. This is the thing. So let's do it. Equal 11664 plus 35,000 times 0.19. Okay. Now this is your second package. Let's total it. Let's total this second package. What's the number? The number is going to be 49370. 49370 is the new number. Now we can compare. Now we can compare the two revised packages using the company's thing, using the incorporation thing. The total number is 49370. Using the incorporation thing, the total number is 49370. 49370. And using this thing, it's 51977. 51977. Using the sole trader working, sole trader trading profit working, the number is 51. The total tax is 51977. And using this incorporation thing is 49370. So yes, this time with this revised profit, it is beneficial. It is beneficial to go for incorporation. Okay. So you will just write one line. You will be just writing one line for this. That's it. The amount of tax saved. Let me show you that line. Take your time. Here you go. This is the last line. See, given the increased forecast trading profit, incorporating her business will now result in overall tax and NIC saving of 2607. 2607. This is the conclusion. And that's the end of question number 1. That's the end of my dear student, question number 1. Hope you understood this part. Hope you understood this part. Now I'm going to move with my question again. I'm going to move in my question thing again. Okay. Students, now we are moving towards question number 2. Question number 2, as you all know, normally the last 40 marks format is fixed for TX paper. First question 10 marks about tax planning, which we just did. Then one question for individuals, 15 marks, and then one question for corporation. So this is individual question, which includes a little bit of partnership, little bit of employment income, and a slight touch of losses. Slight touch of losses, only trading loss, slight touch of trading loss. Okay, individual trading loss, not companies. Now this question is pure individual question. This question is pure individual question. Okay, I'm sure you remember the rates. If you remember the rates, you will be like a rocket. Okay, so please look at the screen. Now I have already shared the question on your WhatsApp group. If you want to see the question there, it's okay. If you want to take the picture from this screen, you are most welcome. Listen, Poppy is employed by Zune PLC. Poppy is employed by Zune PLC, and she's also a member of a partnership. The following information is available. The following information is available. Number 1, during the tax year 21-22, Poppy was paid a gross annual salary of £65,000. Poppy was paid a gross annual salary of £65,000 in respect of her employment income. Very simple. You here the heading is employment, and this is human being, individual. You have to make employment income PNL. You have to make employment income PNL, and this is the first thing you will add in this employment income PNL, that is salary. You will add the salary. Okay. Now students, look at here. This is the way I teach in the class as well. In the employment income, there's major 2 things. The first thing is benefits. The second things are deductions. The first thing is benefit, and the second thing is deduction. Benefits are the things which we normally receive from employer. Benefits are the things which we normally receive from employer. We normally receive from employer, right? And deductions are normally the things which employee pay, right? For which the burden is borne by employee. Okay. Now let's read the point number 2. During the period from 1st August 21 to 5th April 22. Now wait, as this guy is individual, so automatically the fiscal year should come in your mind. Employment income PNL is always made for fiscal year. Employment income PNL is always made for fiscal year. Now, during the period from 1st August 21 to 5th April 2022, that means I think it's 8 months. If you can calculate 1st August to 5th April means it's almost 8 months. Please count yourself. Zune PLC provided, employer provided. Zune PLC is the employer provided. So it's a benefit. Okay. This topic is benefit. Now, Poppy with a diesel powered motor car with a list price of 21,800. The motor car cost Zune PLC 20,600. Come on, tell me. Very, very interesting thing. Old thing. Always take the price before trade discount. Always take the price before trade discount. So this price is relevant. 21,800 is the relevant. According to the rules, you have to take the price before trade discount. Okay. Now, it has an official CO2 emission rate of 75. That means greater than 55. Greater than 55. Now, one information is very relevant. That is this the diesel car with RDE, which follow the rules of RDE or not? Read it. The motor car does not see this, meet the real driving emission standard. That means this is the bad diesel car. This is not a good diesel car, bad diesel car. So there will be some punishment. I hope you remember. What are the rules for such diesel cars? Till 55 grams, the rate is 19%. Till 55 grams, if the CO2 is 55 grams, exact 55 grams, the rate is 19%. And for additional, each additional 5 grams, 1% will be added. Each additional 5 grams, 1% will be added. So can you tell me how much is the CO2? Boys and girls, please tell me. How much is the CO2? How much is the CO2? How much is the CO2? CO2 is 75. Now you do it yourself. 75 less 55. 75 less 55. Okay, good. 75 less 55 is 20 grams additional. 20 grams additional, so this will be 4 more percent. So your percentage is 23%. Yes, easy. Your percentage is 23%. Now, Poppy was not provided with any fuel for private use, so that's good. No fuel benefit, no fuel benefit, no fuel benefit. So what you have to do now, it's very simple. Your car benefit will be 21,800 times 23% times 8 upon 12. Don't forget to apportion. Don't forget to time apportion. This is written in the examiner report. These are the basic mistakes. Taxation about small things. It's not about big things. Okay. So 8 upon 12. Why? Because the car is provided for 8 months. The car is provided for 8 months only. The car is provided for 8 months only. Okay. The next benefit is also very, very, very famous and very simple benefit. Now, throughout the tax year 21-22, Zune PLC provided, again employer provided, so it's a benefit. It's a benefit. With 2 mobile telephones. So we know the rules, only one phone, the first phone is exempt. So out of this 2 phones, 1 phone is exempt and the other phone is full-time taxable. The telephone had each cost £480 when purchased by the company in March 2021. That means before the fiscal year. This phone will be given to us before the fiscal year. That means we as an employee used it for the whole fiscal year. We as an employee use it for the whole fiscal year. Okay. And now you have to calculate the usage benefit. Usage benefit. Now wait, let me teach you in the same style as I teach in the class. Is the mobile phone a car? Is mobile phone a car? No. So the topic is assets other than car for private use. The topic is assets other than car for private use, and you do 20%. You do 20% on it. So it will be 480 times 20%. I think it's 96. Okay. Now, the fourth line is again the free marks. Free marks. Don't sleep. Don't sleep. All of the taxable benefits provided by Zoom are payrolled. Are payrolled. See this. This is very important. You know, my dear students, for non-cash taxable benefits, don't sleep. Just 1 minute. For non-cash taxable benefits, there is a form which we call P11D. For non-cash taxable benefits, normally in past before 3-4 years, there was a rule that we have to fill this form. All employers had to fill this form P11D. But now we have 2 options. Either fill this form P11D for non-cash taxable benefits, either fill this form P11D for non-cash taxable benefits, or if you are if you are doing if you are paying tax through payroll, and if you are including this in payee system, like every month your employer is paying tax. So now you don't need to include it in P11D. There is no need to file any P11D form. Okay. So now we have 2 options. The first option is P11D form for non-cash benefits. For non-cash taxable benefits, either go for P11D, and if you are payrolling your benefits, if you are paying tax on these non-cash taxable benefits through payee, so in this case, now you don't need to use P11D form. So my dear student, you tell me in this question, in the point number 4, they have openly written that all the taxable benefits are payroll. That means no need to use P11D. Yes, somebody's asking. I will upload the class on YouTube. I will do it. Okay. So to be very honest, this is all free marks. This is not a technical paper. You don't know the meaning of technical paper. This is routine paper. This is like your normal class, basic class. So this is the first thing, easy part. Listen to me. You know, the question is a mixture of difficult and easy marks. at least pick the easy marks to cross the 50 marks border. If you do this, still you get the 5 marks. We just did the 5 marks thing. So 5 marks are not bad. In the 15 marks question, 5 marks still has some worth. Now, the next thing is partnership. You have option to waste a lot of time on partnership, or if you are a smart player, you can just do it in 2, 3, 4 minutes. Okay, look at here. Let me first make a little sketch. This is your accounting period for partnership from 6th April 21 to 5th April 22. There is a change in partnership agreement on 6th of July 21. So 3 months here, 9 months here. First of all, the good news is the accounting period, you know, the partnership. What? Listen, students. The partnership is all about business. We never do partnership in, we never do job in partnership. Partnership is all about trading income. Okay, don't forget this. This is a very basic, the first thing. And this topic is related to individuals. So if your accounting period of partnership is 6th April to 5th April, 6th April to 5th April. So the good news is no need to do any basis period calculation. Good news is you don't need to do any basis period calculation because your accounting period is already aligned to fiscal year. That's a very good thing. Be active. Now, Poppy has been in partnership with Rose and Tees since 6th April 2013, years back. But T resigned as a partner on 6th July 21. So during the fiscal year or during the accounting period, one guy resigned. We all know, listen, look at here, that whenever any partner joins the partnership or any partner resigns the partnership, the agreement changes. The partnership agreement changes. Okay. So listen, in the first 3 months, we have to do separate appropriation, and the last 9 months, separate appropriation. In the first 3 months, there are 3 partners. 3 partners are Poppy, Rose, and Tees. Poppy, P, R, and T. P is Poppy, P, R, and T. 3 partners, P, R, T. And in the last 9 months, only there are 2 partners, and that is P and R. P and R. Now, one more good news. The partners have always shared profits equally. What does it mean? When there were 3 partners, the equal means 1/3, 1/3, 1/3. When 3 partners, the equal means 1/3, 1/3, 1/3. And in the last 9 months, when just the 2 partners left, then equal means 50-50. 50-50, easy thing, not a big thing. Now, for the year ended 5th April 2022, the partnership had a tax adjusted trading loss. Everything is adjusted. Thank you. Tax adjusted trading loss of 19,500. This figure is before taking account of capital allowance. Oh, so everything is adjusted. Just calculate the capital allowance. Everything is adjusted. Just calculate the capital allowance. Okay. And honestly, please look at me. Capital allowance is also 1 minute game. 1 minute game. You don't need to make any pool shoot. Nothing. Just read it and solve it. Giving you 1 minute. No. Okay, 2 minutes. All of you read the point number 3 and tell me the capital allowance. Read point number 3 and tell me the capital allowance. I want to see your smartness. Okay, listen. It's written the Giving you one more minute. Do remember the partners are owners. The partners are owners and they are human beings. Human beings. In Urdu, Hindi, we call insan. Insan. Partners are human beings. They are owners as well. Human owner, human owner, human owner. Okay. The only item in the plant and machinery owned by the partnership is a motor car. No, don't need to worry. Motor car. Okay. Okay. With a CO2 emission rate of 90, something is popping up in the mind, but still don't worry. The motor car was used, this is the very by Poppy, and 70% of the mileage was for private journeys. Yes, Poppy is the owner. Poppy is the owner. Poppy is the owner. And if owner, businessman owner uses for private use, so yes, it's a privately used assets. It's a privately used asset. And listen to me, privately used assets by owner are always depooled. Privately used assets by owner always depooled. So it's a depooled asset. And now again, open your ears. Again, open your ears. Naughty students, open your ears. Privately used assets are always depooled. And whenever we sell privately used asset, immediate balancing adjustment is done for the complete amount. Complete balancing allowance or balancing charge comes in 1 second. Remember? And this is the case. See, the written down value, the NBV of the motor car was 8,400. So this is the NBV. See, the beginning NBV was 8,400. And the motor car was sold during the year for 5,400. Now, first thing, whenever the asset is sold during the year, so you know the rules, none in the year of sale, none. So no need to do any 6%, 18%, nothing. You don't need to apply any. But yes, you have to do the balancing adjustment. Yes, you have to do the balancing adjustment. See, sold for how much? 5,400. So how much is the, it's like a loss on disposal. It's like a loss on disposal, and loss on disposal is balancing allowance. Loss on disposal is balancing allowance. So how much is the total balancing allowance? It's 3,000. How much is the total balancing allowance? It's 3,000. Okay. But now look at the discipline of tax department. Now look at the discipline of tax department. The tax department says, we were ready to give you this allowance. We were really ready to give you this allowance, but you did one crime. You did one bad thing. You did private use. So only business percentage is allowed. Only business percentage, this 900 is allowed. And yes, this is an allowance. This is a balancing allowance. So 900 is an allowed expense in this case. 900 is the allowed expense in this case. 900 is the allowed expense in this case. 900 is the allowed expense in this case. Did you understand the thing? Did you understand the thing or not? Please tell me. Did you get it? Okay, so now wait. Your loss, wait. Your tax adjusted trading loss was 19,500. Loss is a negative number, remember? Loss is a negative number. And now your capital allowance, which is also we also deduct capital allowance. So already the loss was negative number, plus the capital allowance is also a negative number. So your loss will be, I think, 20,400 something. Yes or no? 19,500 less 900 is how much? Is 20,400. 20400, 20400, 20400 is your loss. Total partnership loss is 20400. You got it? Now one last technical thing, please be with me. This is for complete 12 months and this is the complete partnership firm's loss. This is for complete 12 months. See, this is for 12 months and for complete partnership firm loss, complete partnership firm loss. And in this question, we have to do first 3 months separate and last 9 months separate. You have to do first 3 months separate. So 3 months means 20,400 into 3 upon 12. 20,400 into 3 upon 12. Can anybody tell me? Can anybody tell me? 5,100 is the first 3 months loss. And what about last 9 months? It's going to be 15,300. Okay. So first of all, we distributed between first 3 and last 9, first 3 and last 9, first 3 and last 9. Okay. Now, in the first 3 months, there were 3 partners. There were 3 partners, P, R, and T. P, R, and T, and we are just working for P. We are just working for P. So in the first 3 months, the ratio is 1 upon 3. So the loss related to the poppy, the loss related to the poppy is 1,700. The loss related to the poppy is 1,700. Don't sleep again. In the last 9 months, only 2 partners were there, P and R. In the last 9 months, only 2 partners were there, P and R, and the ratio was 50%. So this will be 7,650. Can anybody add these 2 losses? You will get the total loss. You will get the total loss. How much is this? How much is this? Yes, the 9,350 loss related to poppy. 9,350 loss is related to poppy. That's it. 9,350, the loss is related to poppy. 9,350 is the loss which is related to poppy. Now, we are doing partnership right now. Please, we are doing partnership. And you know, the partnership loss is always a trading loss. The partnership is for trading, business. So can anybody tell me, now this poppy is the individual. This poppy is the individual human being. And when human being has a trading loss, there are many options. You remember the options? You can carry it forward. You can carry it forward. But in this question, they are not asking you to carry it forward. One more thing. You can do current year and last fiscal year. You can do current year and last fiscal year. And if you want to do current year, the total income. Current year, this 9,350 will set off the current year total income. This 9,350 will set off the current year total income. And this thing you have to do in this question. This thing you have to do in this question. This thing you have to do in this question. Okay. So this trading loss of poppy, will set off current year total income. Now, as a student, you may ask, sir, do we have any total income? Yes. See the above area. We have a big employment income. We have a big employment income. We have a big employment income. Okay. So we can set off this 9,350. And I hope you remember this all. Soon we'll be working on it. Soon we'll be working on it. And now again, you have free marks. You have free marks, but with one condition, you must have studied the lecture. If you have studied the lecture, it's all free marks. Next thing. See this. UK government securities. UK government securities. This is this thing. See. Guilds. Hope you remember. I taught you guys one thing. Whenever, if there is a question, make your mind simple for this. If you have bought, look at here. If you have bought the guilds in the same period and you sold it in the same period, if you have bought the guild in the same period and you sold it in the same fiscal year, just count your number of months and calculate the interest. That's it. Just count the number of months of your ownership. Just count the number of months of your ownership and calculate the interest income for those months. That's the basic easy rule. But one condition, don't forget, if you have bought, listen, if you have purchased these loan notes, these guilds in the same fiscal year and sold also in the same fiscal year, just count the number of months of your ownership and calculate the interest income using nominal value, using always nominal value. Okay. Now, on 1st January 2022, this is our fiscal year. 1st January 2022 is our fiscal year. Hope you remember. Poppy purchased for 50,000. Irrelevant. The purchase price and selling price is irrelevant. Why? There is no CGT. There is no capital gain tax on these guilds. These guilds are exempt assets for CGT purpose. These guilds are exempt assets for CGT purpose, right? Now, purchase for 50,000 guilds with a nominal value of 40. Yes, this is relevant. This is always used for interest. The guilds paid interest at 3%. Yes, the interest rate is always relevant. Yes. With interest paid half yearly on 30th June and 31st December. Irrelevant. Leave it. Based on the nominal value. Poppy sold the guilds. Yes, in the same fiscal year. So bought here and sold here. So how many months? 1st January to 31st March, only 3 months. 1st January to 31st March, only 3 months. And sold for 5,300, again irrelevant. This is irrelevant. Buying price and selling price is irrelevant because there is no CGT. There is no CGT. If you have taken proper classes, you know this. If you have taken proper classes, you know these rules. Now, listen, students. You just have to calculate 3 months interest, and that is 40,000 times 3% times 3 by 12. This will be your interest income. 40,000 times 3% times 3 upon 12. 40,000 times 3% times 3 upon 12. Okay. 40,000 times 3% times 3 upon 12. Okay. So in this question for the first part, let me summarize now. Be confident, be confident. You have to win, you have to win, you have to clear this paper, and you can. The first thing is employment income. I've already taught you, and I'll calculate in the Excel sheet in seconds. And now we won't waste time on an Excel sheet. Okay. Number 2, partnership. I've already told you, partnership, we just calculate the laws, the capital allowance, everything. And this is guilds. Guilds interest income is just 40,000 times 3% times 3 upon 12. 300 is your interest income. 300 is your interest income. Okay. 300 is your income, interest income. Now, just read the first 2 requirements. Leave the 3rd requirement. I'll teach you afterwards. Don't worry. First 2. Assuming that Poppy claims the loss relief against her total income. Against her total income. Remember, the trading loss can be set off against current year and last year. Current fiscal year and last fiscal year total income for the tax year 21-22. So they are saying you openly that use in the current year. Use that 9350. Use that 9350 trading loss in the same year. Use that 9350 trading loss in the same fiscal year. Use that 9350 trading loss in the same fiscal year. That's it, against the total income. So it's very simple. So first of all, we have to calculate the total income. First of all, we have to calculate the total income, and then we have to set off this thing. Easy marks, easy marks. Be confident. I'll do the working. Then second thing, explain how. Free marks, 2 marks, free. Explain how Poppy's income tax liability in respect of her taxable benefits for the tax year 2021-22 will have been collected, and if any forms containing details of these benefits will have been reported to HM Revenue and Customs. Yes, as it is written that they have included in the payroll, they have included all the taxable benefits in the payroll. So the employer pays, employer pays pay monthly. Employer pays pay on behalf of employee on the monthly basis. So they will include, the employer will include the tax on these taxable benefits in the payroll system. And now they don't need to file any P11D. They don't need to file any P11D. Yes. If you don't pick the option of payrolling, benefits, taxable benefits on monthly basis, then you have to fill the P11D form. Otherwise you are not required. This thing you have to write. Okay. So This is A and B. A and B requirement I have taught you. Yes, the C requirement I'll soon discuss. It's about self-assessment. It's about self-assessment. I'll be discussing it. But first, I'm going to my Excel sheet and I'll quickly show you the work of this first thing. Okay. So be active with the question paper. Be active with the question paper. After this question, I'll give you a short break. After this question, I promise I'll give you a short break. Okay. But yes, we have to utilize our time as well. So students, look at here. You have employment. First heading is employment income. What is the salary? What is the salary? What is the salary? The salary is 65,000. The salary is 65,000. Please now be active because I have explained you in detail. I have explained you in detail. So now please cooperate. 65,000 now for car benefit. For car benefit, you know, the base rate is 19%. The base rate is 0.19 plus how many percentage? Plus 4% plus 0.04% extra. 0.19 plus 0.04 multiplied. Wait. Multiply the cost. Multiply the cost. What was the cost? Which cost should I pick? Before trade discount. Before trade discount, which is 21,800. 21,800. And then times 8 upon 12. 8 upon 12. This you have to do. This you have to do. 21,800 times 23% times 8 upon 12. Please, students, I have already explained you this thing. Let me do it here using the formula. Equal 21,800 times 0.23 times 8 by 12. Okay. 3342, 3342 or 3343, whatever you like it. Now, for mobile telephone, it's 480 times 0.2. Okay, because the one phone is exempt. One phone is exempt. One phone is exempt. We all know this. So this is the usage benefit. Okay. Okay. Now this is your employment income. Now what about saving income? What you say about saving income? Remember the guilds, only 3 months interest. Only 3 months interest is relevant. 40,000 times 0.033% was the rate times 3 divided by 12. This is the thing. Here you go, 300. Okay. So let me calculate the total income first. Let me calculate the total income first. This is your total income. This is your total income. And you know, now you have to set off the loss in front of this total income. You have to set off the loss in front of your total income, in front of your total income. Okay. Now let's calculate the loss, giving you just 1 minute to settle down. 1 minute to settle down. Check it out. Check it out. Okay. Now, next thing is partnership loss relief. Let's do it. How much was the trading loss? How much was the tax adjusted trading loss already given in the question? It was, I think, 19,500. It was 19,500. Yes, 19,500 was the trading loss. And you remember the balancing allowance? The balancing allowance was 8,400 was the NBV, less how much? 5,400 is the proceed. So, and times, because we did the private use, so only the business percentage is allowed. Only the business percentage is allowed, that is 0.3. Okay, so let's do it. It comes to be 900. It comes to be 900. Okay, let's calculate the revised trading loss. Okay, this is the revised trading loss. Now, we all know that there is a changes in partnership structure after 3 months. So first 3 months, a separate appropriation, and last 3 months separate appropriation. First 3 months separate and last 3 months separate. Profit share of Poppy. Now, how to do it? How to do it? Wait. It's 20,400 times 1 divided by 3. 1 divided by 3. Remember? So this will be this /3. Sorry, I forgot to do, wait. 20,400 is for 12 months. 20,400 is for 12 months. So 20,400 times, sorry, 3 upon 12. First calculate the 3 months thing. First calculate the 3 months thing. Okay. And now what is the Poppy share? 1/3. In the first 3 months, the partnership share was 1/3. So yes, 1 divided by 3. This is the real working. So how we gonna do it? It's 1,700. Okay. Now let's do for the next month. It's minus 20,400 times 9 upon 12 times 50%. Times 50%. Okay. It's 7,650. So how much is the total loss for this? 9,350. 9,350 is the total loss. 9,350 is the total loss for Poppy. 9,350 was the total trading loss for Poppy. Total trading loss for Poppy. Okay. Now, what can you do? What can you do, students? Students, what can you do with this trading loss? Already they have told you in the requirement. Already they have openly told you in the requirement that use this trading loss in front of your current year total income. In front of your current year total income. And now let's see the current year total income. How much is this? Yes, 68738. So you can easily set off 50,000. You can easily set off 50,000. When you can easily set off 50,000, so 9,350 can be settled. 9,350 can be easily settled, right? And now, once you will set off the loss, you will get the total income, and this total income will be around 59,000 something. This total income will be around 59,000 something, and when your income is under 100,000, you will get the full personal allowance. You will get the full personal allowance of 12,570. You will get the full personal allowance of 12,570. So let's calculate your final taxable income. Let's calculate your final taxable income. Sorry. This is your taxable income, 46818. 46818 is your final taxable income. $46818 is your final taxable income. No need to calculate income tax liability. Sorry. hold. One student has just calculated me the income tax liability. No need. If you are not asked to, don't do extra work. You won't get a single extra penny for that. Did you understand the question? Did you understand this 10 marks part? Did you understand this 10 marks thing? Please tell me. Did you understand this 10 marks stuff? Okay. Now let me show you the B requirement. In very simple words, we have written it. See this B part. Because Poppy's benefits are payroll, the related income tax liability will have been collected under the pay along with the tax on her salary. That means every month the employer will pay the tax pay on salary as well as on non-cash benefits. Payroll benefits do not have to be reported to HMRC on form P11D, right? As they are using payroll thing, as they are going for the payroll option, so now no need for P11D form. Otherwise, yes, otherwise they have to go for P11D form for non-cash taxable benefits. For non-cash taxable benefits, otherwise they have to go for non-cash taxable benefits. Okay, right? So now we are taking a small break, like 7 to 8 minutes, 7 to 8 minutes break, and then we'll be back. Then we will be back. Now we have the last requirement, and then we have one more last question. So hope you are fresh now after the break. So this is about self-assessment. You know, for individuals have to pay, individual has to pay three types of payments. First POA, first payment on account, second payment on account, and then balancing payment. First POA, second POA, and then balancing payment. Remember? Now, if you delay your POA, if you don't pay your payment on account on time, you just have to pay interest. You just have to pay late payment interest, 2.6% per annum. But if you delay your balancing payment, my dear student, then not only you have to pay the late payment interest, but also a penalty. Yes, penalty we have done in the class. So this question is about late payment interest as well as penalty. This question is about late payment interest and as well as penalty. We'll show you how to do it. Now, Poppy filed her self-assessment tax return for the tax year 2021. For 2021 fiscal year, the due date is 31st January 2022. Wait, your due date is 31st of January 22. The 31st January 2022. For 2021 fiscal year, the due date for balancing payment is 31st January 2022. Hope you remember this date, 31st January 2022. Now, but did not make the balancing payment of 2600 until 31st August 2022. That means 7 months late. Listen, from 31st January, next month is Feb, March, April, May, June, July, and August. Total 7 months late. Now, let's do the penalties and late payment interest. Let's do the penalties and late payment interest. Again, it is easy. Again, we have done in this thing in class. Okay, read the requirement. C. Advise Poppy of the interest, yes, and penalties that will be charged by HM Revenue and Customs as the consequence of her not making the balancing payment for the tax year 2021 until 31st August 2022. Okay. So yes, you have to pay late payment interest as well as penalties. Now, first, let me recall you the penalties topic. Let me recall you the penalties topic. This is the topic. See, this is the topic. I have taught. Wait, let me change the date as well. Okay, the dates are now. The dates are now according to your question. First of all, 31st January is your due date. 31st January is your due date for balancing payment. 1 month they will just 1 month they will wait. The tax department will wait 1 month. They will say, please pay, please pay, please pay. But if this 1 month is crossed, if you just cross the 1 month, this first month, and you come in the 1st March, then a fixed 5% penalty, like 2600 was the amount times 5%. 2600 times 5%, 130 is the penalty. 130 is the fixed penalty on you. 130 will be the fixed penalty on you. Okay, then 1 March, April, May, June, and July, they will wait 5 months more. But if you cross this border, and you enter, you step in August month, in August month, again you have to pay the 5%, that is 130. So that means in this question, as you paid on 31st August, so obviously 130 and 132 penalties will be applicable. 2 penalties will be applicable on you. 130 plus 132 penalties will be applicable on you. This is the answer. I'll show you the exact wording in the Excel file, don't worry. And one more thing, late payment interest is always there, whether it is a payment on account, whether it is a late payment on account or late balancing payment. So can you count the months? Your due date was 31st of January. See, so Feb, March, April, May, June, July, and August, total 7 months late. You paid 7 months late, so you have to pay 7 months late interest. You have to pay 7 month late payment interest. That is 2600 times 2.6% times 7 upon 12. So these two things, this is the penalty which you have to pay. This is the penalty which you have to pay. And the second thing is late payment on interest. This is the penalty which you have to pay. And the second thing is late payment of interest. Second thing is late payment of interest. Okay, you got it? Please reply on the chat box. It's 7 months, February to August, 7 months. Please count. February to August, it's 7 months. Okay. So now we have our last question. Students. We have, no, that's for penalty. That 28th Feb was penalty. After 28th Feb, first penalty is due. Interest is something different. Late payment interest is something different. This is for exact months. Next thing. Mixture Limited is a large company, therefore has to make quarterly installment payments in respect of its corporation tax liability. Now, I would like to say this question is so far the easiest question of all this past paper. All of them, easiest of all of them, I'm telling you, easiest. Just concentrate, you will understand. There are two types of companies, a small company and large company. Small company and large company. Remember, small company pays tax. Small company pays tax after the end of 9 months plus 1 day. From the end of the accounting period, 9 months plus 1 day. But yes, large company pays tax in installments. Large companies pays tax in installments. Okay. And now how to identify the between the large and small? How to identify between large and small? Look at here. If your augmented profits are greater than limit, if your augmented profits are greater than limit, then my dear students, if your augmented profits are greater than limit, then you are a large company. If your augmented profits are greater than limits, then you are a large company. What is the limit? The limit is, the limit is 1.5 million. Now the next question. Do we apportion the limits because of anything? Yes, two factors. Because of two factors, we have to apportion the limits. Number one, if the accounting period is less than 12 months, if the accounting period is less than 12 months, then you have to apportion the limit. And if you are the part of 51% group of companies, so according to the total number of members, you have to apportion. You have to apportion, right? Okay. So now, first, the good news is the accounting period is exactly 12 months. Open your eyes. Your accounting period is exactly 12 months. Your accounting period is exactly 12 months. So no need to apportion the limit because of accounting period. No need to apportion the limit because of accounting period. But yes. Mixture Limited has 251% group of companies for many years, means 5-10 years. So just think, this is mixture, and let us say 70-70, A and B, 251% group of companies. So how many total members are there? How many total members? Mixture plus 251% group. So there are total 3 members. So you need to apportion the limit by 3. So your limit is 500,000. Don't forget, your limit for current year is also 500,000, and the last many years your limit is 500,000. Last many years your limit is 500,000. Be very smart. This is very easy if you remember the rules. If your memory is good, you are a winner. Now next, for the year ended, this is your year. For the year ended 31st March 2022, Mixture Limited has taxable total TTP of 470, and dividends from non-group companies. Non-group companies means less than 50% holding is 45,000. So now wait, you remember how to calculate augmented profits? You remember how to calculate augmented profits? It's TTP, which is 470. It's TTP, which is wait 470,000 plus dividends from unrelated companies, which is 45,000. Can anybody tell me the AP? Can anybody tell me the AP? How much is the AP augmented profit? 525 or 515? It's 525 or, oh sorry, 515. Yes. Wait. Now tell me, as your AP is greater than, look at here, AP is greater than 500,000. Your augmented profit is greater than 500,000. So this year you are a large, for sure. This year you are a large company. This year you are a large company. But if you have really taken my classes, or if you have taken classes from anywhere, You know, there is one special exemption. If this is the first year of your large company, that means if you were not a large company last year, if you were not a large company last year, then yes, you can leave paying through installments. You can stay away from installments if you are not large last year. But look at this, look at the story. The company had same level of profits for the year ended 31st March 2021. That means last year the story was still same. So that means we were also large company last year. We were also large company last year, and this year also we are large. So yes, we can't stay away from installments. We can't stay away from installments. We have to pay tax in installments, 4 installments, as it is a 12 months accounting period. So we have to pay tax in 4 installments. To be very honest, if you know this topic, these are cash 5 marks. I'll show you the requirements. Quick 5 marks. Quick 5 marks. We'll tell you. Wait. Don't read any other thing. No need to read any other thing. Leave it. Leave it. Okay. Now one thing. Oh, I pray that you remember. I pray that you remember this thing. Listen. Dividends are not taxable at all. Dividends are not taxable at all in companies. You always apply 19% on TTP. For corporation tax purpose, you always apply 19% on TTP, right? Let's move to the requirement. Let's enjoy the requirements now. This is the first requirement. See. Explain why Mixture Limited is classed as a large company for the year ended 31st March 2022. Because the current year augmented profits are greater than the limit. The current year augmented profits are greater than the limit, as well as this company was large company last year. As well as this company was a large company last year, right? Or you can simply say, right, this year this company is large because the AP is greater than the limits. That's it. Forget about the last year. This year this company is large company. They are not talking about installments. They are not talking about installments. They are just saying it's large or small. Yes, large. Why? Why large? Because the augmented profits are greater than limits. Very simple. Next thing, calculate the Mixture Limited Corporation tax liability for the year ended 31st March 2022. 30 seconds. Yes, wait. What is TTP? TTP is 470K. 4 times 19%. 470,000 times 19%. Come on, do it. 470,000 times 19%. Come on, do it. Tell me. 470,000 times 19%. How much? 89,300. Okay, thank you. This is your corporation tax. Now the next requirement. Explain when this will have been paid. Explain when this will have been paid. You have to pay in 4 installments. 4 installment. And you know how to calculate one installment? Divide by 4. Divided by 4. Come on, do it. 89,300 divided by 4. What is your first installment? What is your one installment? 22325. 22325. Excellent. 22325. And now when you have to pay, it's all cash marks. From the beginning of accounting period is 1st April. The beginning of accounting period is 1st April, right? So just count the 7th month. 7th month is October. On the 14th of October, For the first installment, we have to pay on 14th October 2021. Then after 3 months, 14th January, then 14th April, and then 14th of July. Okay. See, you have just earned 5 marks from this. You have just earned 5 marks. What else you want? Now listen. Now listen. I'll show you this how to do on the Excel. Just you have to write it, nothing else. Next thing, capital expenditure. Student, look at here. Look at here. You know, this is a very special part of your capital allowance, that what expenditure to be included as a plant and machinery like normal capital allowance, and what is the part of building. For building, there is a special thing, IBA. For building, there is a structure building allowance. That is a separate topic. That is not plant and machinery. Building is not plant and machinery. Hold, go slow. Whenever any teacher teaches you capital allowance, they first teach you like 2-3 classes that capital allowance is on plant and machinery, and the teacher straight away writes on the class. Teacher straight away write in the class that no capital allowance on land and building. No capital allowance on land and building, right? Straight away. Yes, in the end we teach structure building allowance. That is something different. That is a new thing. Okay. So this is very important thing. This is very important. Look at here. What will, if you are buying a building, so there are a lot of things in the building. In the building, there are lifts. In the building, there are ventilation system. In the building, there are movable walls. In the building, there are fixed wall. In the building, there are stairs. In the building, there are doors and windows. In the buildings, there are ceilings, false ceilings, right? So there are many things. There are many things in the building. So now to cut the story short, what things inside this building will treated as a plant and machinery, will be treated as a plant and machinery for capital allowance purpose. Listen, go very simple. All the walls, all the fixed walls, doors, windows, ceilings, all the fixed walls, doors, windows, ceilings, stairs, these all are the part of building. Just teach you in a different style today. You know, when you buy a new home, like in builder's condition, you know, we use a word in the common, builder's condition. So in builder's condition, yes, they give you doors, windows, they give you doors, windows, ceilings, stairs. Yes. So these are the things which are considered as part of building, not part of plant and machinery. But yes, if there is a movable wall, you have done this 2 or 3 times in your course. If there are movable walls, then movable walls is performing a function. Movable wall is considered as part of plant and machinery. Otherwise, these doors, windows, ceilings, stairs, doors, windows, ceilings, stairs, these are considered fixed walls. These are considered as part of building, and they are not part of plant and machinery. Okay, so be very careful, be active, and let's pick things what are plant and machinery and what are not the part of plant and machinery. Okay, let's start. Read it. A new freehold building was purchased. A new freehold building was purchased. The purchase price included 22,200 for a staircase linking 2 floors of the building. Staircase is not plant and machinery. Staircase is part of building. Staircase is not plant and machinery. So we don't need to include it. Okay. 16,400 for sprinkler equipment. Equipment. See the word equipment. Equipment itself is a plant and machinery. All equipments are plant and machinery. The firefighting equipment, these all are plant and machinery. Yes. Yes. Then the fire alarm system. The fire alarm system. Yes, this is part of plant. 18,700 for doors and windows. No, I just told you doors and windows are part of building. Doors and windows are part of building. Remember? Then 27,100 for ventilation system. Yes, this is part of SRP. This is part of a special rate pool we have done in the question. So from this first paragraph, what to include? Staircase, not plant and machinery, it's part of building. The equipment, the fire alarm equipment, yes, it's plant and machinery. Doors and windows, never. Doors and windows are part of building. You can search on Google as well. It will come in the first. 27,100 ventilation system, yes, it's part of plant and machinery, and you have done in your basic course SRP. It comes in SRP, ventilation system. The next thing, machinery was purchased for 76,600. Machinery is always part of plant and machinery. Yes. At the same time, a 9,200. This is from old past paper. Nothing new. This is old thing. Quick response is needed. At the same time, a further 9,200 was spent on building. Alterations which were necessary to make the installation of this machinery. When I teach, I give example of IS 16. Listen, as the machinery is plant and machinery, so the alteration which is needed to do the machinery, the alteration which is needed to fix the machinery is also part of plant and machinery. Like in IS 16, remember we capitalize installation cost. So yes, these two, this one plus this one, these both things will be part of plant and machinery. Yes, these two things will be part of plant and machinery. Again, one thing from the old course, previous past papers. Movable partition walls were purchased 33,800. Yes, movable walls are always part of plant and machinery. Movable walls are always part of plant and machinery. Movable walls are always part of plant and machinery. Okay. Now, next, a new decorative wall was constructed at the boundary business premises at a cost of 44,700. Decorative wall is a fixed wall. It's a fixed wall, and you know, fixed wall is a part of building. Fixed wall is a part of building. Yes, movable wall is part of plant and machinery. Movable wall is part of plant and machinery. Fixed wall is the part of building. So this is again one more 5 marks. One more, no need to calculate capital allowance. Just you need to pick, you need to choose which one are plant and machinery and which one are not part of plant and machinery. So just take 1 minute to read it again, and then I'll show you the requirement. Then read the requirement. Again. Easy. Explain. List the expenditure. See this B part. List the expenditure by Mixer Limited during the year ended, which will have qualified as plant and machinery for capital allowances purpose, for capital allowances purpose, for capital allowance purpose. That's it. That's it. 4 marks. Your answer should indicate by the 0 of any expenditure which does not qualify as plant and machinery, as plant of or machinery. You are not expected to calculate the capital. See, no need to calculate the capital allowance. No need to discuss the rate as well. It's also done. This requirement also done. This requirement also done, students. Now, to be very honest, a general requirement, and it is present. To be very honest, it is present in my normal course. I always teach openly with detail. Right now, I'll give you the summary, but this thing I teach in detail. You know, in your course, 2 things can be depooled. In your course, capital allowance, 2 things can be depooled. Number 1, privately used assets by owner. Privately used assets by owner in individuals. You have to depool. That is a must depool thing. And the second thing is short life assets. Short life assets should be depooled. Short life asset, you have the option to depool. You have the option to depool. Now tell me, why do we? It is written in my notes. I know my notes. It is written in my notes. Why do we depool SLA? Why do we depool SLA? Why do we depool SLA, short life asset? You know the answer? Because we normally expect balancing allowance on the disposal of SLA. Because we normally expect balancing allowance on the disposal of SLA. And just think, if you have depooled it, you will get immediate balancing adjustment. If you have depooled it, you will get immediate balancing adjustment on SLA. But yes, you know the definition of SLA. What are short life assets? Short life assets are those assets which have expected life of around 9 years, less than 9 years. Means year of purchase plus 8 years, year of purchase plus 8 years, year of purchase plus 8 years. Remember, year of purchase plus 8 years. And if you have not sold it, by year of purchase plus 8 years, then the balance will be transferred into main pool, general pool again. You can only enjoy this exemption. You can only enjoy this exemption for year of purchase plus 8 years. Hope you remember the rules. But yes, one thing is for sure. This is the new thing I'm telling you. If you are eligible, okay, let me ask a quiz, one special quiz. Can anybody tell me short life assets belongs to which family? Main pool or special rate pool? Write on the chat box. Short life assets belongs to which family? Tell me. Main pool or special rate pool? Very good, very good. Main pool. No, it's main pool. Main pool, yes. It's main pool family. Short life asset related to main pool family. And you know, nowadays, open your eyes, open it. Nowadays, just for companies. You know, there is 130% super deduction. For companies, there is 130% super deduction. 130% super deduction for main pool. Remember? Yes or no? So now just use your brain. You are old enough, mature enough to understand my words. Listen, if you are eligible for 130%, go for it. If you are eligible for 130% now, what are you waiting for? Just go for it. Then no need to do any short life asset election. No need to go for 18%. It's 130% is better than everything. 130% is the best of all. You're not getting. If you are eligible for 130% on main pool, and this, yes, short life asset belongs to main pool family, then just use a matchbox. Use a matchbox or a lighter on short life asset election. Why go for 18% if you are getting 130% now? Are you getting? Is this working? Is this working? So one point you can write is that when you can get 130% on short life asset, then no need to do any election or depool. Then no need to do any election of depool. Kindly write on the chat box, did you understand this 130% point? Because we are doing companies question, not individual. Yes, for individual, there is no 130%. But for companies, there is 130% super deduction. Please tell me, did you get, or have you done the course or not? Or you guys are still taking the classes? Now, my dear students, these 2 or 3 points, you can write 2 or 3 points, 2 marks, 2 points enough. Now, next, the last thing is property business income. Property business income, property business income. Look at here, property business income. I have a question from all of you. I have a question from all respected students. Listen, in individual, property income is taxed on receipt basis, cash basis. But for companies, it's accrual basis. Remember, for individual, property income is taxed on cash basis. For individuals, property income is taxed on cash basis. But for companies, it's accrual basis. It's accrual basis. Remember? So now, right now, we are doing companies, not individuals. Right now, we are doing companies, not individuals at all. We are doing companies, so it's accrual basis, okay? And for next thing, in companies, we compute everything for accounting period. In companies, we compute, my innocent student, everything for accounting period. And in this question, the accounting period is 31st March 2022. The accounting period is 31st March 2022, and plus it's a complete year. So complete 12 months when it is ending on 31st March 2022. So it must be starting at April. It must be starting at April, okay? So let me write, let's do it like babies. Let's be infants. Let's be infants like the way you are taught in the class. Be infants. You are infants. Come on, start. It's April, May, June, July, August, September, October, November, December, Jan, Feb, and March. Okay. This is your 12 months. This is your 12 months. Okay. And this is 2021. See, till here it's 2021, and then these 3 months are 2022. Okay, 1st April 21 to March 31st March 2022. 1st April 2021 to 31st March 2022. Okay, let's start. Mixture Limited lets out a warehouse which is surplus requirements, although the property was empty between 1st September 21 and 28 Feb 2022. Okay. The following income and expenditure relates to the year ended 31st March 2022. Don't sleep. On 1st January 21, insurance this is for the 12 months. See, this is the 12 months insurance. Insurance 12 months. But in these 12 months, see, this is from 1st January 21 to December 21. How many months out of these 12 months lies in our accounting period? Tell me. This is from January to December 21. The 9 months, see, these 9 months lies in our accounting period, 9 months. So what we'll do, we'll take 1700 times 9 upon 12 in our accounting period. 1700 times 9 upon 12, because now it's accrual basis, not cash basis. It's accrual, not cash. So just count the number of months which falls in your accounting period. So it's 9 months. Okay. Now, on 28th March 2021, 28th March 2021 physically is last accounting period. 28th March 21, the date is last accounting period, but let's see the period for which it belongs to. The period rent for the quarter ended 30th June 2021. See, that means this rent is for April, May, and June. This 7,800 rent is for April, May, and June. April, May, and June. April, May, and June. And yes, April, May, and June falls in our accounting period. So we'll take it complete as it is. We'll take this 7,800 as it is. Although it is paid last year, we are not working on cash basis. We are doing on accrual basis. Please don't sleep. Then on 4th July 2021, on 4th July 20, rent for July and August. Yes, July and August again. Rent for July. I've written June 2 times. Sorry. I've written June 2 times. Okay. That's my mistake. For July and August also falls in our accounting period. July and August also falls in our accounting period. So we'll take complete 5,200 as a rental income. We'll take complete 5,200 as a rental income. Okay. Now, next. Advertising for tenants. Advertising for tenants. See the date, 5th December 21. Yes. Advertising is a one-off expenditure. We never apportion it. Advertising is a one-off expenditure, teacher. And yes, if it falls in your accounting period, we'll account for as it is. Yes, this will be an allowed expense. Next. On 1st January, insurance for the year ended 31st December 2022. Now, this 1,900 is the insurance from 1st January 2022 to December 2022. So only the 3 months. Only the 3 months falls in our accounting period. Only January, Feb, March, only the 3 months falls in our accounting period. So we'll take 1,900 times 3 upon 12. 1,900 times 3 upon 12 in our accounting period as an allowed expense. Okay. From January 2022 to December 2022, this insurance is for 12 months, but we'll only include the 3 months because we are working on accrual basis. Now, one interesting thing after a long time. On 1st March 2022, see this date. See this date lies in our accounting period. 1st March 2022, we received the premium. We received the premium 18,000. We received the premium 18,000. Can you see? Now, this is for individuals and companies both. Listen my voice. Listen my voice. Premium is always taxed on receipt basis. Yes, excellent. Somebody's just texted. Premium is taxed on receipt basis. Yes, it is taxed on receipt basis for companies and individual both. But you know, there's a special working for this. 18,000 is the premium received less 2% into N-1. Remember this? Yes, very good. So how will you do it? You will do it like this. Just premium received 18,000 less 2% into 5 minus 1 multiplied by the premium. So how much is this? 8% of 18,000. 8% of 18,000. Can anybody tell me? It's 1,440. Thank you. So this is your taxable premium, which will be included as a property income. Taxable premium. How much? 16,560. Thank you. This 16,560 with this 16,560. This 16,560. This 16,560 will be included as a taxable property income. Taxable property income. Okay. Again, this is not difficult. It has been done many times in the class. Last. On 1st March 22. Now listen, students, this is a technical issue. Rent for the quarter ended 31st May. See, quarter means 3 months. 31st May is 8,400. Listen, March, April, and May. See, March, April, and May. For these 3 months, the rent is 8,400. For these 3 months, the rent is 8,400. But can you tell me, Our accounting period is ending on March. Our accounting period is ending on March. So only 1 month is relevant for us. Only 1 month out of these 3 is relevant for us. So we'll do 8400 multiplied by 1 upon 3. We'll include 8400 multiplied by 1 upon 3 here. 8400 multiplied by 1 upon 3. Why? Because it's not cash basis. For companies, it is accrual basis. For companies, it is accrual basis. Please read this. Okay. I request you to read this again. This part is technical. Yes, this property income is technical area. If you don't have good grip in accruals concept, then you can do mistakes here. Now let's read the requirement, last requirement. See, calculate the property business income figure which will have been included in the mixture limited taxable profits for the year ended 31st March 2022. It means you don't need to calculate any TTP. You don't need to calculate any TTP. Just calculate the property income. 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 Okay. Now, my dear students, first thing, you must have, I'm going to shift myself on the Excel sheet. Lot of theoretical discussion as well, which has already been written. So it will not be a time taking thing. But yes, you must have question with you. You must have question with you. I have sent you on the WhatsApp group. If you don't have the question, take the picture, wait. Take the picture, wait. This is the picture you can take. If you want to take the picture, let me show you the question. Take the picture of the question, this part, and then this part. Okay, now I'm moving myself to the Excel part, okay? See, this is the first part. This is how you have to write the first part, You remember there were 3 companies, 2 51% group of companies and 1 is mixture limited. So yes, the limits will be divided by 3. Limits will be divided by 3. 1500,000 divided by 3 is 500,000. Can you see this? And now, what is your augmented profit? 470 plus 45, 47, 45 is 515. So as your augmented profits are greater than this limit of 5 lakh, yes, you are a large company. This is simple 2 marks, no other discussion. This is greater than 500,000 limit, you are a large company. That's 2 marks you have done. Now, how to calculate corporation tax liability? Corporation tax liabilities always calculated on TTP times 19%. TTP times 19%. TTP is 470,000 times 19% is 89,300. Okay. And now, as this company is a large company this year as well as in the last year, so there is no exemption. There is no exemption. So yes, the company will have to pay in 4 quarterly installments. And remember you guys calculate, remember you guys calculated this installment yourself. We just did it. Okay. And now what are the due dates for these installments? 14th October 2021. Then after 3 months, 14th January 2022. After 3 months, 14th April 2022. After 3 months, 14th July 2022. So this is total 5 marks for you guys. This is A1 and 2, total 5 marks, total 5 marks for you guys. Total 5 marks for you guys. Okay. Now let's move to the next capital allowances thing. Next capital allowance thing. Look at here. These all are the names. I just told you there are few things which are part of building, not plant and machinery. Staircase is part of building, right? 0. But yes, sprinkler or equipment 16,400. This is equipment. This is part of plant and machinery. Doors and windows always part of building. Doors and windows always part of building. Then yes, ventilation system is part of plant and machinery, and it comes in SRP. SRP. This is old thing, not a new thing. So this is 27,100. Then you have machinery. It was 76,600. Yes. Then building alterations, installation to do the machinery is also part of plant and machinery. Previous course, old course thing. Then movable partition walls, also part of plant and machinery. Movable partition walls, also part of plant and machinery, 33,800. But yes, the fixed wall is always building. The fixed decorative wall is always building. It's not part of plant and machinery. So finally, these are the costs which you have to list down. These are the costs which you have to list down for plant and machinery purpose. For plant and machinery purpose. Did you remember I just discussed with you? Please write on the chat box. Did you remember I just discussed with you guys all these things? Did you remember? Okay, now the next is about short life asset. The next thing is about short life asset. Very simple. You have to write 2 or 3 points. Normally 2 points are enough. See, the short life election will be beneficial when asset is disposed of for less than its tax written down value. Yes, when it is sold for less than value, then you will get the balancing allowance. You know how you get the balancing allowance? Whenever the proceeds are less than NBV, whenever the proceeds are less than NBV, then it's a balancing allowance, right? And the balancing allowance is beneficial if you want to depool it within 8 years of the accounting period in which it was purchased. Yes, this is year of purchase plus 8 years. However, see, this is the technical point which I told you for the companies. However, there is no benefit to a short life asset election where the 100% annual investment allowance can be claimed or the super deduction of 130%. I have a question, all of you, please. Why examiner has written 100% AIA? Because for individuals, AIA is still available on short life assets. For individuals, AIA is still available on short life assets. But for companies, now new course for the companies, for main pool items, now they have super deduction of 130%. Super deduction of 130%. Super deduction of 130%, right? But one thing you guys can keep in your mind, This is a big dodge. If you want to score the just for position holders, I'm telling you one thing. Just for the sake of position holder, for super deduction, you have to buy new assets. For super deduction, you have to buy new assets. Remember? Then the balancing allowance given when the asset disposed of accelerates the allowances rather than these being given on reducing balance basis. Yes, remember, when the asset is depooled and you sell it, you get the immediate balancing adjustment on depooled asset. You don't get it with number of years. No, you get it immediate. And that immediate is beneficial when you depool it. That's why you depool it, because you expect, you want immediate balancing allowance. So out of these 3 points, you can write only 2. That's also good. 2 marks, 2 points are more than enough. 2 marks, 2 points are more than enough. Now, the next thing is about the last thing is property income. Property income, listen. In the property income, check the question. First of all, let's do premium received. How much was the premium received? 18,000 less 2% into n minus 1. What is n minus 1? N minus 1 is 5 minus 1, okay? 5 minus 1. Oh, wait, sorry. I forgot one thing. Equal to minus 18,000 times 0.02, bracket open, 5 minus 1. Yes, I forgot to write 18,000. This is your taxable premium, the first thing. Now, how many rents we have to take? How, go and check the question. How many rents are to be included? Go and check the question. Let me show you. How many rents are relevant. 7,800 we'll take complete. 7,800 was for April, May, and June 21. Then plus, then you have to take 5,200 as it is. Then you have to take 5,200 as it is. Then only 1/3 of 8,400. Then 1/3 of 8,400. 8,400 times 1 divided by 3. This you have to do. Okay, right? This thing. So what is the number? The number is 15,800. 15,800. Now, advertising was full-time allowed expense. As what advertising complete 900 was allowed expense, as it is a one-off expense. Advertising falls in your accounting period. It should be taken complete allowed. How to calculate insurance? Look at here. Insurance, for insurance, the first 9 months. The first 9 months is how? 1,700 times 9/12. Bracket close, then plus. Second number was 1,900 times 3/12. 1,900 times 3 divided by 12. 1,900 times 3/12. This will be 1,750. You can do it. 1,750. This will come out to be 1,750. Okay. So these two are the allowed expense. The above two. See, this is the income. This is your income. 16,560 is your first income. Rent receivable is your second income, and these two are your expenses. So how to calculate the total property income. How to calculate the total property income? This is 29710. This is 29710 is your total final property income. Total final property income, total final property income. Okay. Now, don't live in fantasy. My last words, very important words. Don't live in fantasy. Yes, you can do in this 15 marks. The first 5 marks was very easy. Accepted. First 5 marks easy. In the second capital launch section, yes, doors and windows you can do mistake. Staircase you can do mistake. All the remaining things came in previous past paper. So out of that 4, if you can score 2 marks, let's go prudent. So 5 plus 2, 7 marks. Then short life asset. Short life asset. Why do we depool short life asset? This definition is written in my notes. When I teach, it's written in my notes. You can go and check. Why do we depool SLA? I write this heading, to be very honest. Still, that was 2 marks requirement. Take 1 mark. So 5 plus 2, 7, and 1 mark in SLA, 8 marks. And then property income. In the property income, you can at least do this 16560, you can do it. This 1650 is premium receipt thing, at least you can do it. So yes, in this property income, this was 4 marks requirement. If you scored 2 marks, if you scored 2 marks in property income, still you can have 10 marks out of 15. Please say thanks to your God. It's very good. It's very good. Who wants 100 marks? I don't want 100 marks and from anybody of you. Please don't do this favor to me. So if you can score 10 marks out of this 15, it's very good. It's not good, it's excellent. Similarly, in the last question, the partnership part, and that if you score 10 marks in that, 20, and 5 to 7 marks in that planning question. So if you score 25 or 27 marks out of 40, still it's excellent. You have other 60 marks as well in the paper. Just think. So plan your paper in this way that yes, mistakes are there. There are a lot of things you have to learn, and you have in the exam, you have to solve full paper, not just one area, not just individuals part, not just corporation part, not just employment. Everything is there. So yes, you forget things. It's normal. It's normal. Even in past, many position holder students forgot things. Even, and you know, one special thing about the F6 paper, tax paper, you forgot things in your exams, and when you come out of the examination room, you remember, oh, I did this on the same time you got it, and you call your teacher, yes, I did this mistake. So it's common. It is there. So don't worry about it and be active. And in WhatsApp group, you should help your friends. You know, I say to my students that how to memorize things in F6, how to by keep doing exam kit, by keep revising the short notes type things, or by keep discussing. So if you help somebody in this way, you can revise yourself as well. But one more thing, don't use WhatsApp group in a negative way. Don't ask foolish questions, or please maintain the discipline. Okay, maintain the discipline. Take care and best of luck for your exam. Allah Hafiz.